All right. Welcome. How are you guys doing today? Am I the only one here? No, heck no. There's people in the room. How about that? Right off the bat, it's great to see some of you guys here dancing the dance of the financial markets with me every morning. Come in here, make a little bit of money, put it in our pocket, a little jingle, 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 right? That's what we're here for. Hey, look what I got. I think I got this thing figured out. Look at that. I'm in the center and the chart's there. Just like magic. All right. We'll put me down here for now. All right. Okay, let's take a look at the markets. What's going on? Let's come in here and we're going to bring up our favorite four, right? Our favorite squares. This is Hollywood squares. Up in the upper left-hand corner of the Hollywood square is S&P 500. That's the one we're going to put our iron butterfly on. All right, our wild eye, crazy eye. And I have to admit, I was a dereliction of duty yesterday. What was my dereliction of duty? We put on that iron butterfly, and I went and put one on my real money account too. And I got busy, had to teach another couple classes, walked away, had to go downtown, run some errands, and I didn't sit and take pictures all day of what the market did. Now I got a few pictures, so we can look at those. So I can review a little bit. But the market yesterday ran pretty hard, left the delta cone of profitability. And I didn't take pictures of what our wild eye, crazy eye hedging strategy did during that time frame. And that was the whole reason of doing it, right? We were trying to find out what would happen if the market left the cone of probability, and it left the cone of probability. And I don't know what happened. I wasn't here to see. So I apologize. Now it came back into the cone of probability at the end of the day, and we made money, so they were profitable. But I don't know what happened when it left the cone of probability. Technically speaking, we'd be in a loss, right? But we've been doing some wild and crazy things, which is why we call it the wild and crazy iron butterfly. We've been doing some wild and crazy things with our hedging strategy. And Bruce had a great question on the forum yesterday. If you guys don't go out and read the what do you call those things? Comments? What a hard word to remember. If you guys don't go out and read the comments, then you're missing part of the conversation. And it would be great if you were part of the conversation by adding to the comments. So go out, add to the comments, and try and keep it kind. All right. I know sometimes forums get a little nasty. This is not a nasty environment. This is a fun and education, and we're having fun here, and we're trying to learn how to make a little bit of money. All right. So don't get nasty in our forums. That's not what we're looking for. We're trying to have fun and enjoy and help each other make money. All right. So learn how to do these crazy markets. So join in on the forum. But Bruce had a great question out there. He says, "Hey, Lane, you said not to put your insurance policies beyond over the weekend." And I said that kind of out of habit. Why? Because we don't generally like to have our options over weekends. Because when you buy an option, a weekend is nothing more than 2 days of time decay. But when you sell an option, it's 2 additional days of time decay. The market doesn't generally go anywhere, and they generally price into a market. Now the bell just rang. Oh, no, it's getting ready. 6 seconds. 5, 4, 3, 2, 1. Here we go. There's the bell. Watch what the market does. It's going to flush. Bounce all over the place. Look at it go. Going nutso on us. So anyway, to continue our conversation here, you don't generally like to trade options over the weekend, but with our wild eye, crazy eye, iron butterfly, we have a different motivation, right? That's why it's a wild, crazy butterfly pattern. That's why we call it wild and crazy, because we do different things. We're kind of turning the general rules of trading upside down. And so where we might not want to have an option over the weekend. In this situation, Bruce, we might want to have an option over the weekend, or at least have the expiration over the weekend. Now, we don't want to hold it over the weekend, but that's not the point of our insurance policy anyway, is it? The point of our insurance policy is to have the insurance coverage, but not have to pay for it. That's the idea, right? We don't want to have to pay for that insurance, but we want the insurance. So how do we reduce the premium? How do we reduce the cost of that insurance policy? Well, we string it out for a longer period of time, making the theta slower to decay. Well, if you have a Friday situation, a situation where you're trading on a Friday and you need to have your insurance policy and you push it out, it's actually going to be better to push it out over a weekend, isn't it? Think about that. If we push it out over a weekend and we buy those, who's going to sell them to us? Well, usually it's the market makers. They're the ones who are selling us the options. Not a lot of retail traders want to be buying short-term options over a weekend. That's just not done. So they're going to maintain their value. So if you buy it, they're going to maintain their value. They're not going to let that thing decay over the weekend. We learned that, right? We tried that in the past. Go back and look at a previous video where we're like, hey, what would happen if we sold an option on Friday that expired on Monday? Wouldn't we just collect all of that premium over the weekend? Wouldn't that be a great idea? Oh my goodness, what a great idea. And it didn't work at all, did it? Why? Because it maintained its value. We didn't lose anything. And that was the whole point. We didn't make anything because the option didn't lose any value over the weekend. So they're going to maintain the value. Now, the problem is on Friday, what they do is they jack the prices up. So usually if you look at the, when we go look at our options table, our options chain, right? And we go out and we look at, let's say just a 7. Oh, let's do a S&P version. So we just go do a 3-day option. They jack the price up. Now, right now you can, this is a call. Let's go look at the calls. $950, what you can call it. Theoretically, it's worth $1,200. So you can buy a call option for a lot less money than what it's worth. Of course, that's because the market's tanking right now and nobody wants to buy calls when the market's going down. But that option is worth $1,250 and you can buy it for $962. Let's go look at the puts. Look, same thing on the put. It's worth $1,000, but they're selling it for $900 on a 3 days left. That's because it's got to go over a weekend. Oh, see, I don't think it's a bad idea to use the weekend in our Wild Eye, Crazy Eye, Iron Butterfly, because that option is going to maintain its value. They're not going to let it die over the weekend. And usually the thing is they're going to prop up the cost. They're going to charge you because they know that there's 2 days of theta decay over a weekend. So they're going to charge you a higher premium for the option so that it covers that 2 days of theta because they don't want to lose that either. So I think it might actually work in our favor. Might just work in our favor. Should we try it? Let's try it today. We're going to try it today. We're going to give this market just a little bit of time to settle down. Why are they selling for less than the theoretical value today? Both options, the calls and the puts. That's weird. Let's go look at the news event, see what's going on with the news. Let me bring that up. Bring up our economic calendar. What have we got going today? Let's refresh that and get today's Friday. Today is Happy Friday. Let's see. We only want 2 impact. How's that? UTC 6. Again, this is my time. You're going to have to make the adjustment to your UTC time. I'm in Mountain. So average hourly earnings month over month at 6:30, 10 o'clock. Fed Cook speaks. So we get the Fed speaking at 6:30. He's not gonna. He might talk a little bit. He might say something. He might tip his hand a little bit, but I doubt it. He's just gonna pontificate because we've got FOMC economic projections coming up on Wednesday next week. We've also got, I thought we had where are they going to change the interest rates? I thought we had an interest rate decision coming up soon. Let's just look at high impacts. core inflation. So Wednesday is going to be a nasty day. Fed press conference, FOMC economic projections, Fed interest rate decision. So it's next Wednesday. Whatever you do, don't put a wild eye, crazy eye, iron butterfly on next Wednesday. All right. Today was non-farm payroll at 6:30. So forecast was 151 and it hit an actual of 272. Wow. Is that way down? Non-farm payroll. The U.S. economy added 272,000 jobs in May 2024, the most in 5 months, compared to a downwardly revised 165,000 in April and a well above forecast of 185,000. The reading is also higher than the average monthly gain of 232,000 over the prior 12 months and 246,000 in the first 4 months of the year. Employment continues to trend up in several industries led by healthcare, namely ambulatory healthcare services. People are getting old. They need more people in healthcare. Government increased. Oh, hey, there's something new no one expected. The government hired 43,000 new people. You don't think that's political, do you? Trying to get the employment numbers up. 43,000 new people added to the government. How about that? What was that? Somebody said one time we should have small government. Leisure and hospitality, 42,000. That's good. That's people are traveling and having fun and enjoying their lives. Mostly food services and drinking places. They added 25,000. And professional, scientific, and technical services added 32,000. Other job gains were also seen in social assistance, 15,000, and retail trade, 13,000. Meanwhile, employment showed little or no change in mining, quarrying, and oil and gas extraction. Well, construction, manufacturing, wholesale trade, transportation, and warehousing, information, and financial activities. Data for March was also revised lower, with the March and April revisions combined employment at 15,000 lower. What do you think? Do you think they'll revise this one in a little while and make it lower too? Maybe. But can you believe that they've added 43,000 more people to the government? I'm a small government guy. Okay, till I go stand at the line in the DMV. Then I'm a big government guy. Why don't you hire more people here at the DMV? Because you're a small government guy, Lan. You don't want good services at the government. Oh, I am now a big government guy. All right. What are we going to do? What are we going to do, guys? What are we going to do? We got to make some money today. Made $200 in my real money account yesterday. That's where my options stood at the end of the day. That wild eye. I put on a wild eye, crazy eye. It made $200, but I think I made, like, in my other account, I had a good day. I made almost $1,000. Well, $827. That's not a bad day. I could pay some bills with that. All right. So what are we going to do? That Dow's running. We could do a little day trading. We want that S&P to come back to the VWAP. So we're going to get a chance to do that. Right? It might not. Let's go look at the daily chart. Okay, so this is what the daily chart's doing. Now remember, this is one of those butterfly patterns. Now, the S&P breaks butterfly patterns all the time, so we just have to keep that into consideration. But nonetheless, it is one of our butterflies. And that butterfly wing, generally speaking, is bearish. Oh, let go. Right there. Usually we see that thing flush back down off those butterflies. But the S&P likes to make these little butterflies. If you go back and look, and they like to rally out of butterflies. And that's not a butterfly. Not really. That's kind of an ugly one. That's not a butterfly. But it likes to rally out of these little pullbacks, right? It likes to pull back, then just keep right on going, trucking to the moon. Especially when you got good news days. We got good news days. I doubt that the Fed is going to lower interest rates. They keep teasing it. I don't think we're going to. I don't think you're going to see lower interest rates for a very long time. And if you're a person who makes money, profits from having low interest rates, you got to start switching your thinking, and you got to now start making money from high interest rates. All right, you just got to be on the right side of the market. So you got to there's strategies that you use when the interest rates are low, and there's strategies that you use when the interest rates are high. And if you need to know how to make money when interest rates are high, well, you need to do something that collects interest as opposed to pays it. When interest rates are low, you want to do something that pays interest, right? You want to borrow money, borrow, and pay no interest. And what do you do with that money that you borrow? Well, you invest it in things that make money, like real estate. All right. So you buy lots of real estate. And then when the interest rates go down, or when the interest rates go up, what do? Well, you buy things, you own things that make money on interest rates. Well, what makes money on interest rates, Len? If I just put it in the bank, it's not very good. 1.5% interest is all I'm getting. Well, we don't expect you to put it into the bank. We expect you to trade it in the financial markets, right? There are bonds, bond funds, ETF funds. There's things like that that'll make you 8, 10, 12, 15, 20% return on your money when interest rates are high. Excuse me. Drink some tea. Hold on. So that's why I always say we try to make money, right, over here in these wild and crazy markets with lots of leverage. So we come and we day trade, we sell options, we trade options, we buy options, we go into the stock market, we look at aggressive markets, we buy options, we try to make money. And then we take that money and we put it into a much safer place because we're already being very aggressive. We're already working in very highly volatile markets. So we don't want all of our money in volatile markets. We want some of our money sitting in very safe markets. And so we earn money in the very volatile markets, and we take that profit and we move it over into very safe markets. What are some safe markets, Lan? Oh my goodness, I want my money in safe markets. Well, we put some money in some safe markets. We have to go look at some stocks. You want to go see that? I'll do that. How about we do that on Monday? Monday, come back and we'll go over and we'll look at some very safe places in the stock market to put your money. I promised at one point I was going to teach you a lesson on how to retire with no money. So that'll be part of it. We can talk a little bit about that, and we'll also talk about where to put your money. It's a very safe place to put it that'll now take advantage of high interest rates and make you some pretty good money. I mean, I've got making some pretty good money off of these high interest rates. So there's advantages and disadvantages to both sides of the market. All you have to do is just play both sides, right? You just play both sides. That's why you have real estate, so you can buy real estate when interest rates are low. Have investments, have intrinsic and extrinsic value working for you, right? And then we have the stock market where we can make money when interest rates are high, and we have intrinsic and extrinsic value. All right. In Pitt News Magazine, Aidan Gray had a fantastic article, and we talk about this in class at the university. Some of you might remember. Bruce, you remember the conversation that we had about different types of value of money. Maybe we'll talk a little bit about this on Monday as well. That'd be a good subject to lead into this thing. Just to finish our conversation here, though, we where's Aidan Gray's article? Right here. Demystifying Stock Growth, Exponential, Linear, and Compounded Insights. Now, this is a very important article, and I don't know if people understood how important this article was. Aidan wrote this for me. I had him write it because we talk about this all the time. What's the difference between exponential, linear, and compounded growth? Linear growth is what happens when you buy a house, right? You buy your house and you have linear growth, which means just over time, the house is going to increase in value. But you still only have one house, right? You have exponential growth, which is what sometimes you'll see stocks do, like NVIDIA, all right? Where it just, like it's on Viagra, it goes straight up. It's called exponential growth. The problem with exponential growth, it's great, it's wonderful. We all love exponential growth. But exponential growth, again, you still, if you bought 10 shares of NVIDIA and it went through this exponential growth leg and you suddenly turned your 10,000, your $10,000 of NVIDIA into $50,000 of NVIDIA. That's great. We love exponential growth. It's rare, but you still only have 10 shares. You had exponential growth on your 10 shares, but at the end of the day, you still only have 10 shares. Okay. What we want is compounded growth. Now, if you could combine that exponential with compounded, that would be pretty awesome. Right. But what's the difference? Compounded growth is where you have generally comes from a linear growth stock or bond or something where you have linear growth, where it's just a slow incline of growth over time, but it throws off income that you can then reinvest back into whatever it is that you want to invest it in. And now you have more of that item. So in real estate, let's say you buy a house and you rent it. Well, you have linear growth on the house, but you have rent coming in that you can now go buy more real estate. So now you can use that investment money or the income that investment is producing to buy another house. So now you have 2 houses, and then you have 3 houses, and then you have 4 houses. That's called compounded. All right. And we can do that in the stock market, right? You can do it through several different means. You can buy the stock. Well, if all you do is buy a stock and wait for it to grow, that's linear growth. It might go exponential, but you need compounded. So that stock that you buy needs to throw off income somehow so you can buy more stock so you can compound. Otherwise, you're just doing linear and exponential. You're not getting that compounded growth. And what's one of the 7 wonders of the world is compounding, right? So compounded growth is what we want to accomplish. We want to take our money and we can do compounding through a number of different ways. Let's say I buy SVOL, right? SVOL. That's a bond. And that bond throws off some sort of income for me every month, right? So I put $100,000 into SVOL. Every month it's going to throw off 10% return, and we're going to reinvest that back into SVOL. Now, every month I'm going to buy more SVOL. I'm going to compound. And so every month that compounded continues to grow, the compounded, and then the growth that you had goes back in, reinvests, goes back in, reinvest, goes back in, reinvest, and that's compounded growth. That's how you get wealthy, wealthy, wealthy over time. That's like getting rent on your stock. Now, you can also get that's called your dividends, right? So they pay out dividends. But there's also stocks that'll do covered calls. They actually trade ETFs that you can get that are covered calls ETFs. So you buy the ETF, you give them money, and then they'll go out and trade covered calls and collect the premium from options and reinvest that, and that becomes your dividend. So those are strategies that we do here, right? We do covered calls, but there's ETFs that you can put your money into, and they'll do those as well. And they'll give you that compounded income. So we'll talk a little bit more about that, and I'll show you some of those. How about on Monday? Okay. I'll show you my portfolio on Monday, some of the stocks I've got in my portfolio, and you can look at them and decide if you want to put some money into them and see if you can't start compounding some of your growth. Now, another way you can do it is you can come over here and you can day trade, right? And you can sell wild eye, crazy eye, iron butterflies, and you can collect some money. And then when you collect that money, you take the profits and you put it over into your stock that you may have some linear growth on. And this is how you add more shares to your existing stocks, and that will cause a compounding effect. So there's other ways you can just go get a job. You can go get a job. I don't know. I've never had one, but some people do that. They go work. They actually work. You ever done that? I've never done that. No, I'm just kidding. Of course I work. I work really hard. But if you love your job, it's not ever work, right? I've never had a job that I had to work at because I've always loved what I've done. So you can go get a job where they actually give you money. And if you can trade your time for money, you can go spend that and buy 4-wheelers or motorcycles or cars or fancy food or fancy clothes, or you can take some of that money and you can start compounding some of your investments. And so you take your money and you continually every month put some of that money into an investment that compounds, and that's another form of compounding. You can put it into a linear style or an exponential style growth asset. And then by you adding money to it from your paycheck, that's also a compounding effect. So make sure you have a savings account that you're continually putting money into. And we'll talk about that a little bit more on Monday. I have a theory on this. We're in Utah. And in this state, for those of you who are not aware, we have a lot of Mormons. Mormons, very good people. Love the Mormon people. And very honest, very good workers, hardworking people. And they have this thing that they like to do. It's called tithing. So they like to give their money to charity, right? Which is the church. Their church is considered charity. And so they give that money to them every month. They get a paycheck and they take a big chunk of it, 10%, and they give it to the church. Now, I have a theory about this, and some of you may disagree, but I think if you think about it, it's a good idea, all right? When you get your money and you want to pay tithing, you need to pay yourself first before you pay your tithing. Now, I know there's this theory in the Mormon church because they argue about it all the time, and the church doesn't really come out and say. They let you choose. Net profit versus gross profit. Well, I get a paycheck, and they take all kinds of stuff out. They take out Social Security, and they take out taxes, and they take out everything. Should I pay my tithing on that? Okay. Or should I pay it on what I get, my gain? So after they've taken all that stuff out. So I get a check for $2,000 every 2 weeks, but they take 1,000 of it out in taxes and insurance and all that kind of stuff. So I really only get $1,000, right? Instead of $2,000, because 1,000 of it gets taken off and going off to the federal government. I get about 50%. I'm taxed at about a 50% rate in this country on everything that they go. So I only get half of my paycheck. Do I pay my tithing on that half, or do I combine it and pay my tithing on the $2,000? Well, you have to decide, right? Which you think is best. I think you should pay it on your net gain. So, and I think that your savings account should be part of that. And why? And here's my theory why. You should pay it on your net gain, not on your gross gain, because your gross gain is going to come back to you at some point in the future. And if it doesn't, then it's never a gain, right? So if it comes back to you at some time in the future, it's at that point you should pay your tithing on it, right? So you pay into Social Security. You don't pay your tithing on the money that you paid into Social Security. Why? Because when you get your Social Security check, you're going to pay tithing on that. So it's the same thing. If you get a $500 check and they hand you a check, you have $500 and you're like, okay, I need to pay my tithing 10% of $500. I got to pay that to the church. No, take off 100 of that and put it into a savings account that's going to compound your growth. Now you have $400, so you pay tithing on $400. And the reason why you do that is because you've taken that $100, put it into a growth compound. Now, when you pull that out, it's your gain. And now that $100 has turned into $10,000 over a period of time. You're going to take that out and you pay your tithing on that money. Now, Jesus actually gets more money because he's participating in your growth, because he could have got his tithing on 10%, which is $100, but you put that into a growth environment where it now grows and compounds and makes you a whole bunch of money. Now, when you take it out, you pay your tithing on that money, right? So you're not paying your tithing on your net. You're paying it on. So you'll pay Jesus his money, but he gets a whole lot more money because you have a whole lot more money. See how that works? It's the same thing you do when you put your money into a tax-free environment, right? You go into an IRA, a Roth IRA, or a standard IRA. Which do you want to do? You want to do a Roth IRA or a standard IRA? Okay, think about it the other way. You can say, okay, I want to pay my tithing only on $400, not on the $500, because I'm going to take $100 off and put it into an IRA. Now I only have to pay taxes or tithing on $400. Okay, but now you've taken that $100 off and you didn't pay tithing on it. You put it into your account. Now when you pull it out, you have to pay tithing on the growth, just like a Roth IRA versus standard IRA, right? So what if you paid your tithing on the $100? So you got $500. You pay your tithing on all $500. Now you take $100 off, put it in the bank. Now when that grows and turns into $10 million, you don't have to pay tithing on any of it. Why? Because you already tithed you already tithed it. I don't know. I'm just playing with you guys. However you want to do it. That's what the church says. However you want to do it. Whatever makes you feel like you're being honest with Jesus. And I know I'm going to go to hell. Blasphemy. Lan is trying to figure out how to make Jesus rich. That's all. Just trying to help make Jesus rich. Let's help you guys save a little money now, invest it, make a little bit of money later, pay more money tithing. But what you don't need to do, I don't understand why you would pay your tithing on the $500, take $100 out of it, put it into the market, grow it to $10,000, and then pay tithing on the $10,000 too. You don't have to pay $10,000 on both, do you? On your gain, Lan, on your gain. Okay. Well, then it seems like to me, then you ought to take your $500, take your $100 out, put it into the market, not pay tithing on that $100 because you're going to pay tithing on that $100 later. So there's no reason to pay it on it twice. That's all I'm saying. And that gets you some money into the markets that you would otherwise be given to Jesus. You give it to Jesus later. Jesus can wait. He's got plenty of money. You're the one that needs some money. So that's my point. It's not that you're not going to pay Jesus. You're just going to pay him on a later date. Pay him down the road. All right. Okay, let's get back to what we're doing here. Trading. Well, I just saved you a whole bunch of money. That was some great trading advice. Okay, here we go. Oh, look, we're back to the VWAP, right where we thought it was going to go. So that market flushed down. That was at 6 o'clock this morning. It rallied back to VWAP. It dropped out when the opening bell came back to VWAP. Now it's above the VWAP. It's making a butterfly pattern. Man, my allergies are getting me. Are you guys having allergy issues right now? I never used to have allergy problems. So that's coming right back to our bow tie. So it's tying off a little bow tie right here now. Give it a second. I want it to be right at VWAP. Why do I want it to be a VWAP? Because I have noticed on quiet days where there's not a lot of news, the market will rally back and forth across that VWAP line and come into the end of the day. It's going to be sitting right at VWAP again. So that's what we want. We want the market to be at VWAP when we put on our option strategy, because that's where it ends up at the end of the day, right on top of VWAP again. So that's when you want to liquidate too. So out in the future, in 3, 4, 5, 6 hours when this thing crosses VWAP, and it might go right to it. Yesterday, did you see yesterday's market? Let's look at yesterday's market for a second. This is yesterday's market. That is where I liquidated right there. Look at this thing. So we got on right here. Are we going to be able to draw on this thing again today? I'm going to struggle. Watch this thing. Oh, crap. I forgot how to do it again. How did we make that work? Where's my drawing tools? Well, now I'm pushing all the buttons and nothing's working. Great. So much for drawing. Oh, there it is over there. And we got to go do this thing, and then we got to go do this thing, and then we got to go do this thing. Okay, so we got in right here. And then the market went all over out here. And if you remember, in the morning, we were immediately down. We weren't making any money. Why? Because it left the cone of probability. Then it came back into the cone of probability, right dead center. And it showed a $10 profit, right? So we were actually showing a $10 profit. We were happy. But then it came down and it rode all the way down, and then it dropped out the bottom. And this is where I was off doing other things, and I didn't take pictures of it. And I really wish I would have, because I wanted to know what our insurance policy was doing at this point. And then it came right back up to VWAP. Bruce, think about this, because you were working on creating a strategy where you would try and time your trades to get in down here and ride the market back to VWAP. I don't know if you're still doing that, but you could think about that. When the market comes down and gets down into these really low regions way outside, and the probabilities are, we know that the market's going to return to VWAP, and that's what Bruce was trying to capture. He was trying to capture that run. We could do that with options, Bruce. We could do that with a straddle or a strangle, and then you could actually peel off one side. So you could put on your straddle or your strangle right here. Put on a little straddle, and then as the market comes down here, your straddle is going to be making as much money as it's losing, right? So it's not really going to be making any money, but one side of that wing is going to be really made a lot of money. It's going to be like $500 in profit, and then the other one's going to be $500 in a loss, and so you're going to be at neutral. You're not going to have any money, right? So what you do is when it gets down here and you time it and you think, hey, I think it's going to return to VWAP, you pull off the profitable one and leave on the loser. And then as the market returns to VWAP, every dollar that it gives you back against that loser is your profit. So then you lock in a big old $500 profit, but now all the market has to do is return to VWAP, and all the money that it gives you back on your option, that's your profit. That's called legging in, legging out. So you leg in and leg out. Just an idea. Then it's not quite as sensitive to the market, and it's not quite as emotionally attached, as not quite as an emotional strain on you as outright contracts. Just an idea. They're a little bit more squishy, right? Just a little bit more squishy. So let's go in. Bruce thinks that's a great idea. Of course, it's a great idea. It's a great idea. Give it a shot. It's worked very successfully for me in the past. I've got some friends who's done that in the past, done quite well. Doesn't work every time, but nothing works every time. But it's a pretty good way of doing things. So, and sometimes you put on a straddle and it just makes a whole bunch of money, and you're like, well, I guess there's no reason to leg out. I'll just take the win, and you can take your straddle off. But if it does move that far and it's equilibrium, take the big profit off and let the other one run back to VWAP, and every penny it gives back is profit. Okay, so this is where I liquidated right here. And you can see that we were up $435, $187. We were down on our insurance policy. We took $247 in profit. So if we go and we pull up, this is Power Hour. This is where Power Hour started. You can see this is where I started taking pictures. Well, we're up $252. Now, I didn't hold my real money at Power Hour. When it came back to VWAP, I took it off. So I made $210 on mine. And I started a little bit late because I put it on after class was over, not during class. So class was over. I went in, stuck on my real money iron butterfly. I actually even closed the software and left because I had to leave. I'd go run errands, go do some business stuff. And then it came back. It dropped all the way down here. And I was really, when I came back and saw that it did that, I was a little frustrated with myself because I really wanted to see what the insurance policy had done at that point. Had any of you put this on to can any of you tell us what happened when the market was down here at that far drop, on that big drop with our insurance policy where we put it in the money? It should have been covering pretty well. But then the market retraced, came back to VWAP, and I sold out. Now we're going into Power Hour, and look at what the market did. It added another $352 to our strategy all the way into Power Hour. So had I hung on to my real money one, I made an additional $150, but I didn't. But I did on the demo. I was like, well, let's see what happens. And the market just died, went completely sideways all the way to the end, just bounced back and forth across the VWAP, which is perfect for us, right? Which is right dead center of our cone of probability. So we hit max profit. That's why we ended up right here with $352. And that shows a $312 loss on our insurance policy, which turned out to be our insurance policy. See, our bought call and our bought put, it says $237 loss, but we had an $87 gain. We actually only lost. Somebody want to do math in their head? Not me, not in front of an audience. Let's do math on a calculator. 237.5 minus 87.50. 87.5 equals. So we actually lost $150 on our insurance policy. So we lost $150 on our insurance policy, and we made $432 on the sold call, and we made $247 on the sold put. So when all was said and done, we made $530 on this thing. 530 buckaroonies. And our goal is, well, let's go see what our goal is. I keep saying our goal is $500 a day, but it's not. Our goal changes every day because it changes based on a percentage, right? So our goal is for today, Friday, well, actually that was yesterday, 232. Closed out the wild eye butterfly, one strike in the money, and that one was actually, you know what? That was my real money one. I closed out 232.50 on the real money, and I put it into our demo account, but I put it on the wrong spreadsheet because I have a spreadsheet like this for my real money too. That's actually for the demo we did 5:30. So I need to change that. 5:30. So that was yesterday's 5:30 in the demo. So we got to come over here to Thursday. And boom, boom, boom. Did we hit our goal? We didn't hit our goal. See, because I said our goal was 500, but it's not. Our goal is 614. Because it changes. Every day you make more money, well, you got to make more money because you're just doing a 1% day. You want to make 1% a day. So 530, we need to make $600 now to reach our goal. It's no longer $500. It's now $600. So did we reach our goal? Nope. We only hit 530, not 614. So that means the next day our goal will be a little bit lower than 614. It goes from 608 to 614. Tomorrow's still 614. All right, so monthly goal so far is saying is 12,000 if we hit our monthly goal. We're at 3,000. The difference is a loss of 8,000, but that's only at the end of the day. We're 8,000 shy of our goal, but we've still got the rest of the month to trade. We're up 3,390 so far in our demo account. All right, and you guys have this spreadsheet, right? Did y'all go get the new version? Because I had some errors in there. Michael Bruce pointed that out. He's like, hey, you got some errors on your spreadsheet. So I got that fixed, and this new spreadsheet, it's out there on your Pit News Magazine. Just go to the link in your email for Pit News Magazine, and it'll be in there, and you can download this spreadsheet. All right. You just have to have subscription service to Pit News Magazine, and then you can have that spreadsheet. For free. It's free. Everything is free. We do all kinds of free stuff. All right, so that's our picture. We got one more. Nope, that was the last one. 5:30. That's how we close this baby out. All right, and I was a dereliction of duty and didn't take pictures of it when it was down here, so I don't know what our insurance policy did. And that was the whole name of the game. Oh, we're leaving. We're kind of losing our... Now we got to wait for it to come back to VWAP again, don't we? Let's go over and see if we can day trade a little bit. Oh, look at the Dow. The Dow's smoking again. Whoa, look at the Dow go. Dow's been a good trader, a good one to trade lately. Dow, look at the Dow. Wow, look at the Dow go. That's the S&P. That's the 2-minute chart. What's the Russell doing? Usually the Russell used to be the one that we really loved, but it's not been as clean lately. Look at the NASDAQ. That thing's dead. Holy cow. Rotten market. Lots of topping tails, lots of bottoming tails. Now, the difference, too, though, is that this is a range 20 and this is a range 6. The reason we had to put NASDAQ up on range 20 is because it's so wild and crazy. Boy, it was hot yesterday. Were you guys hot yesterday? I had to put a fan in the window. I haven't turned the air conditioner on yet, but I had to run a fan in the window all night last night. Now I got my window open and there's somebody out there mowing the lawn. Can you guys hear that? If you guys can hear it, let me know and I'll close my window. Otherwise, I'm letting the cool breeze come through. What are we going to do? Oh, my gosh. I'm feeling some serious FOMO here on the Dow. Should we catch the counter trend on the way back down? Is it going to be a reversal? Or is this thing going to go to the moon? We had such good news. Man, we had good news today. Really super duper good news. The government hired 35,000 people. So our employment rolls went way up. Do you want to try and take a short position here? I don't know if I do or not. That's just a quick little, I don't know if it's going to bounce off there. We'll give it a little breathing room. We'll take one. If it goes back up, we might try and, yeah, see, it's going to touch us. It's going to burn us. Don't burn me. It's going to burn me. Why is it going to burn you, Land? Because it always does. I only got a 33% chance of being right. It's going to go again. Is it going to rocket to the moon again, take off and blast up there? Is it going to give us a, yep, there it goes. Oh my goodness. Then, Land, that was your opportunity to get in another long, and you took a short. Well, don't get mad at me. Oh, look, there's my short right there. Doggone it. That's the way the cookie crumbles. I had it, and then I went dumped out right when it turned back around. Even Land does it. Even Land does it. Even Land does it. I should have just left it on the ATR where I had it. Trade the arrow, Land. Trade the arrow. I am. I'm in at the arrow. Just a couple bars late. Late to the party. Probably go back up again. Let's go and take a reversal on that if it does. You're going to bounce off that 100, the 50. Oh, we got a red arrow down. You're not making any money, Land. You haven't made a penny yet. Oh, rotten little dog. Now are we just going to bounce around? We're not going to make any money. We're going to go sideways. Where's your stop, Land? I haven't got one. Come on. Go to the moon. Although we want the S&P to come back to the VWAP so we can put on our wild eye, crazy eye. In the meantime, Land, you're not doing anything. The market's just going sideways. I almost had it there too. Rotten little market. Oh. Oh. What's it going to do? What's it going to do? Probably nothing. Probably go sideways. Look at it. Look at it. 3 strikes, you're out, Land. 3 strikes, you're out. That's no fun. We're getting a little breakdown here. It's going to rally again. Getting all kinds of good arrows on the bowl, on the Fibonacci. This is a Fibonacci. These red arrows are telling you it's breaking out of the Fibonacci sweet spot to the upside. That's what it told us. That was a Fibonacci downside arrow. Left the yellow, went red. You're going to break the high and go again and leave us behind again. That's what you get for having FOMO. Trying to break a high there. Okay, we'll take one. We'll try it. We'll try it. Just to see if it's going to break that high and take off and go again. If it doesn't, it's going to probably fail and flush. Or it'll just fail and go sideways some more. Come on, take a high. Come on, break that high. Let's go, buddy. Rock and roll. Give us another one of those big, long green runners. There we go. Come on. Keep her up there. Take your Viagra. Do I have to tell, if I make a crude joke, do I have to tell on myself? Do I have to tell you, YouTube? Come on, push it up there. Get us back to break even at least. Take our profits. Come on, you can't even go $70. Come on, you little limp thing. What a limpy market. Limpy, wimpy market. Come on, push up there. Just enough to give us some more money back. Rotten little dog. Push it up there. Push it up there. Push it up there. If it hits that blue line, we're back to break even. There we go. All right. Well, at least we got our money back. Now we can start to trade again. Okay. Recovery. What do you want to do with the wild eye, crazy eye? You sit here and wait for it to come back to the VWAP, or we could put it on right now. Is it going to come back to the VWAP? Watch, the Dow's going to flush, and we're going to wish we were in it. Flush. Down comes the NASDAQ. Down comes the Russell. Boom. Down comes the Dow. Here comes the S&P. Back to the VWAP S&P. Aren't you taking a short Dow on the Dow, Lan? Well, because it's in an uptrend. I don't want to take the reversal. Why don't you take the long right here, Lan? Because it's pretty extended. I don't know if it's going to do it again. I'm just going to try and fall again. Here we go. What happened? Oh, I was on the wrong chart. It's not what I wanted. Plebeian move. Doggone it. Got to be on the right chart. Make sure the right chart is selected. If you're going to trade 4 charts at once, you got to make sure the one that you're going to put your order on is the one you selected. Well, that didn't work. Come on, you rotten dog. I accidentally traded 2 contracts. Oh, you are a nasty little bugger today. You are being mean. Look at the NASDAQ down here. It's getting excited. It wants to play. Too bad we can't put options on the NASDAQ. Man, look at that stupid Dow. Whacked us twice, 3 times. And actually once on the S&P because I put one on the S&P accidentally. I thought we were going to fall a little bit further than that. And I did it again. You can't trade, Lan. Stop. I tried to get in on that arrow right there, and I was again on the wrong chart. Stop. Oh, look, now I feel sick because I was going to try. I tried to get in right here, and I screwed it up. Can't click the mouse button properly. If you can't click the mouse button properly, how are you going to make money? And it ended up costing me $165 because I couldn't click the mouse button properly. I got to go back to mouse button clicking school. Just lost me money. How much does that lose me? So it was 2 contracts. $250 I'd have been up right now. Daggone it. Learn how to click the mouse button, Lan. Learn how to click the mouse button. Well, our S&P is running away without us, but I guess that's okay. We don't have our neutral option strategy on. We need to have a neutral market to trade a neutral option strategy, and the market's running, so we don't. Daggone it. I feel now I got real bad FOMO on that again. I even did it right, and I still got it, still screwed that up. That's what I don't know. Rock's asking how much money would we have lost yesterday if this thing would have gone wrong. I don't know because I wasn't watching, and that's what we were testing, and I didn't pay enough attention to it, so I didn't even test what it was that we were testing. Because we put on our iron butterfly, and we actually put a hedge on that was really quite a strong hedge, and so we shouldn't have lost any money down here because our hedge should have been making really good profit. That's what I was testing. We spent extra money for it. It cost us more money to put it on. And so when the market was down in these really low regions, I wanted to see how much our hedge was covering us. And because I wasn't sitting here at my computer watching, I had to go run errands and left. I don't know. That's what I wanted to test. And I kind of wanted to put that on today and do the same thing and test it this time. Try to watch a little closer. Look, it's getting ready to flush right here. Try again. Now just drop like a rock. No? It went in too soon, Lan. No, it didn't. Try it again. Oh, I'm just playing stupid now. It's going to go up again. You're playing the wrong side of the market, Lan. It's bullish. Just the trend is your friend until the brands are ends. Quit trying to take these short positions. These are just counter trends. Well, easier. Just listen. Do as I say, not as I do. Okay, then why aren't you long? Okay, I'll get long. How far did that last one go? That was quite a move. $110, $100. Let's just see if we can. Oh, now it's going to die on us. You're not going to push up there again after all that? How many drives, Lan? What drive are you in? Low drive probability. Oh, now it's losing its. Oh my goodness. Oh my goodness. Oh my goodness. Drive 1, drive 2. I don't know. Is that drive 3? Steiner, you're stuck on the screen. Still trying to answer his question. I can't remember what it was. Strategy discussion. How much money would you lose? Oh, I don't know. That's why I'm going to have to test that again. Michael Bruce is a lot smarter than me today. I keep jumping in and out of the market and prove what that does. Don't do that. Don't do what Lan did today. Michael Bruce is a lot smarter than me. Well, look at this stupid thing. Now it's trying to go again. I can't pick it. I can't do it. I can't do it. I can't do it. I can't do it. Look at it go again. Look at it go again. Lan keeps trying to take the reversal. We need to do this strategy here. Let me show you. Let's try this one here. I'll show you. This is the one we need to work on. When the market's, it looks like it's really strongly bullish, but it's really not. It's not doing that great. Where is that one I wanted to show you? We need to do this one here. We need to be buying on the pullbacks instead of on the break highs when the market's not strong enough. See that? We'll do this one here. So you have you buy when it comes back and touches. We haven't got the yellow lights on right now. When it pulls back, buy on the lows on this market instead of on the highs. Instead of buying on them when it breaks above. It is an advance. Man alive, look at this thing go. And I'm just sitting here I'm that guy today, the loser. What the hell? Boy, my stupid. I got egg on my face today. All the way to my ears. Are you going to take the reversal, Lan, right here? You can try to take the short? No, I'm getting my hiney handed to me. I need to follow Michael Bruce's advice and sit out for a little while. Take the short right there, Lan. Take that short. Take the arrow. Take the short. It's the counter trend. I know. Don't you want to take the counter trend? No. It's going to flush. I wouldn't want to be in a market that actually moves in my favor. See what it does right here. Yeah, I know, Michael Bruce. Remind me of my bad habits. Bad habits. We just need to get to break even and let it run. Look at the NASDAQ. It's just dead down here. There's breaking higher. It's trying to go long again. The trend is your friend. Try and stay in. Let's see if it wants to go. We'll give her one more shot while we're sitting here. See what it does. Just go, buddy. Go. Nope. Boy, I can't get you break. Plus, I can't push the buttons properly. Look at this. I'm down $440 already. Everything we made yesterday on our wild eye, crazy eye, lands blown up here on the morning session. There, it's going to try again. Do you trust it? No, there's an arrow. It's trying to break out to the upside. I don't think it's going to go. I think we're going to come back. We got over here on the blue lights coming in for an intercept. Wait for the top of the hour. Wait till 9 o'clock. Maybe we can get a trend and we'll recover back then. That was tough. Every one of those little areas right there had topping tails and then bottoming tails. Topping tails, bottoming tails. Let's change this. Preferences on the moving averages. Let's change that 7. We're going to put that up to 9. That thing have to go to hit the bottom of those trends. 28. It's another one of our favorite numbers. Didn't hit 28 though. If it comes down, bounces off 28. In an uptrend, you're supposed to be able to be a buyer. But that's kind of, I'm looking at it, it's kind of far away for some of these markets. Where would you have got in? Tune it in. It looks like a little better, around 18. 20. Try that for a second. We'll just play with that idea for a minute. That's that idea. That's what we're looking at here, where you get it, you buy it on the pullback, and then you put your stop down here as opposed to buy it on a break up. So you're buying a falling knife. And I don't really like that strategy, but this market looks like it's bullish, but then when you try to get in, it just keeps knocking you out. I can't catch one of those trends. Okay, see, but I don't want to take a long position here. It looks like it's all died. Getting ready to reverse and come back down now. Boy, look at that. One great, big, beautiful trend, and there I am, the guy that's sitting on a $400 loss. That's me today. We got back to break even once. And then I had a comedy of errors. And then I just couldn't catch the trend. Still waiting for the, I don't want to put this thing on up there. I want it to come back to the VWAP. I should have put it on when it was right here. And I was talking. Right there. That would have been at 7:44, so 15 minutes into the day. I don't know. It was running pretty hard there. It was coming up pretty fast. I don't know if I'd have wanted to put it on. So we'd have left the Pecona probability pretty seriously there. Just wanted to come back. May never come back. May just stay up there. But the Dow's starting to fall again. My goodness sakes. Lan, you're pathetic today. Like, come right down, touch that 100 period moving average. See if it goes and just blasts right through it. Oh my goodness, oh my goodness, oh my goodness. Wow. Why in the heck am I sitting on a loss with this market? What's it going to do? Any of you guys doing much better than me? Getting my hiney handed to me today. People like to see that. Ha ha! Land lost money. That's not very nice. It's not very nice. Look at this. Feeling. Oh my gosh. Oh my gosh. Oh my gosh. I'm feeling stupid. You guys ever see those games on your iPhone? You ever go to you're looking around on Facebook or something, and then an ad comes up and it shows you, hey, this is a really cool game. You should go watch it. And so you go watch the demo to see if you want to, download the little game on your phone. And then you watch the demo, and the guy's like so stupid. He's like dumber than a rock. He loses every time. And you're like, I could play that game. I could beat that game. No, don't do that. That's the wrong move to do. You're going to lose if you do that. And you sit there and watch that guy, and he's just the dumbest guy. He can't do anything right. That's the way I feel today. I'm the dumbest guy doing it all wrong. And you're like, I could do better than that. I think it's actually the strategy, right? They want to make it look so like you could do that. They want to make you feel like I could do that. I could make money doing that. Why can't Lan make money doing that? Give me that software. Give me the mouse, Lan. I'll go do it. Maybe that's what I'm doing. See, it's reverse psychology on you guys. You could do it. Lan can't do it, but you could do it. Look how dumb Lan is. He's a rotten player. Dumber than a rock. Dumber than Rock Steiner. Was that a play on words there, Rock? Dumber than a rock. That's me. Yeah, exactly, Mark. It's like a pro golfer. Wow, look at that guy. Tiger Woods is out in the sand. What in the heck is he doing out in the trees? I'm better than Tiger Woods. I wouldn't be out in the trees if I was doing this. If I was playing golf, I wouldn't be out in the woods. Look at this rotten luck I'm having. If I didn't have bad luck, I wouldn't have any luck at all. Yeah, those with real experience in the market, they get it. This is exactly how the market goes. Look at it trending like this, going crazy on me, and I was like getting my hiney handed to me every time. Okay, we're going to see if it's going to fall one more time. So this is an ABC pattern. We're going to trail it up till it gives us an ABC. And watch it just turn and go right straight all the way back up to the top. Yep, there it goes. It goes without me. Oh my hell. Oh my hell. Oh my hell. Oh my hell. Okay, get your order off of there. That ain't happening. Oh my goodness. Oh my goodness sakes. Well, we're not getting our S&P to come back to the VWAP either. What are you going to do, Lan? What are you going to do? What are you going to do now? It's going to turn around and fall all the way back down. I'm just going to sit and watch it. I don't trust it to fall. It's a big rally. I don't want to try and take the fall. But it went right back up to the previous high. And that's where it failed before. Ah, man, look at that. Holy cow, look at the S&P. Okay, we think it's going to bust higher. Everything else is running higher. Ah, Lan, trade the right stock, the right chart. If it breaks up, we'll try one more time. Stop trying to get in on highs. But that's where it goes, breaks and goes higher. All right. If it doesn't go, you're going to look like a fool. See? Damn fool. Keep trying to take the A1 breakout. They know you're going to do that. Come on. One good trade away. Just catch one runner. You'll be back in the game. Just hit one long drive right onto the fairway. Be back in the game. Oh, don't fail. Don't fail. Come on, keep it up there. Give us one more nice run. One trade away. You're always just one trade away. Man, look at that look at the NASDAQ down here. There we go. We finally caught one. Look at that. We finally caught one, Lan. You finally caught one. What are you going to do? Well, I hate being down like this. I hate it. I hate it. Hate it. Hate it. That's a big loss over there. $545. Chance of getting it all back in one fell swoop is pretty rare. Probably have to do it in a couple of shots. There's one, just took me out. Come on. Down is the wrong direction, buddy. Up, 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 and away. Come on, Superman. Stopped us out. Well, we're back to 170 instead of 500. Can't shake a stick at that one. Better than a stick in the eye. Take another short right there. That's your strategy, Lan. Look right there. It came down and bounced on our. We're supposed to buy right there, but I didn't. I didn't do it. I don't trust it. I have trust issues. All right. We're not going to get our wild eye, crazy eye, iron butterfly put on today, and we're also going to call it a morning at a 170 down. That's just the way the cookie crumbles. I could stay here and beat myself against the wall a little bit and try and get our 170 back, and I'm sure that will happen. Not too concerned about it, but we're going to come in here to our little spreadsheet. And Lan had a Friday minus 170. Okay, Red Day Friday. Red Day Friday. Red Day Friday. What was the 4? That was a 500. I don't have to be the biggest red day. This is our biggest red day. No, that's supposed to be white. This one here is red. Big red day there. Hey, what happened to our text? White text. There we go. Okay, Red Day Friday 170. New note. Comedy of errors. Learn to press the mouse properly. Learn to press the mouse properly, Lan. Couldn't catch a break on a fantastic market. I was that guy today. All right. Lost $170. I make a note to myself on what to do. Note to self. Don't overtrade. Stop. Sometimes you gotta stop. All right. There we go. That's how we played it today. What's it doing up there now? Boy, look at that NASDAQ. Look at that. Look at the S&P going to the moon. We just had some great news today. Government hired lots of people. I guess everybody hired lots of people. Lots of people. Lots of new people on the payroll. I guess that's good. Lots of people got jobs. All right, guys. Guess we'll check out for the day. I got a Sunday school lesson for you. Don't run off before you have your Sunday school lesson. All right. Plan your trade and trade your plan. Volatility is your friend. Short-term day traders and or scalpers, which is what we were doing today. We love volatility. If you don't have that volatility, the market just won't run. It keeps popping you back, right? We need volatility to break and go. We want a market that just goes decisively and moves in our favor. If it doesn't, we just need to get out. And and realize and recognize the market's just not going parabolic and it's going to keep stopping you out. That's how you lose money, like today. So, good example of a hard day. All right, volatility is what moves the market. News, weather, government reports, earnings, interest rates, and technical traders. No volatility, no trend. No trend, no trade. But man, today was a beautiful market. We had some really good opportunities in there, and I blew most of them and caught one of them. Got us back to a little bit, 170. Don't feel too bad about today. But we're going to leave Friday with a Red Friday. All right, guys. We will catch you on Monday.